This is the AI News Flash for May 29th, 7 a.m. UTC. First up, Bloomberg exclusive. Private equity giants Apollo Global Management and Blackstone are jointly leading a massive $36 billion debt financing package to fund Anthropic's AI chip procurement, marking one of the largest financing deals in AI industry history and a decisive moment for institutional investor entry. The Apollo and Blackstone led $36 billion debt financing package targets Anthropic's large-scale acquisition and leasing of Google Tensor Processing Unit custom AI chips, with additional institutional investor partners being actively recruited to share financing burden in a clear diversification strategy. With Anthropic valued at $965 billion and annual run rate revenue exceeding $30 billion amid rapid growth, the AI infrastructure supply constraint addresses the structural tightness, accelerating the shift away from NVIDIA GPU dominance amid the $725 billion 2026 hyperscaler capex boom. This contrasts with the SpaceX Anthropic compute contract, which was dramatically scaled down from the initial $45 billion 36-month reported deal to actually $7.5 billion over 6 months, marking a decisive case in Anthropic's diversification of AI infrastructure procurement strategy and the most important milestone in 2026 AI industry capital structure transformation. Next, the U.S. Commerce Department officially announced over $2.013 billion in major investments across 9 quantum computing companies under the CHIPS Act incentive framework, marking a decisive moment for U.S. quantum AI technology sovereignty strategy and establishing a federal equity stake incentive framework for national security purposes. IBM received the largest single investment of $1 billion for a new quantum wafer foundry in Albany, New York, while quantum computing startups D-Wave and Rigetti each received up to $100 million, totaling over $2.013 billion across 9 companies under the CHIPS Act framework with federal equity stake structures. This contrasts with the $725 billion 2026 hyperscaler capex boom AI infrastructure concentration, accelerating the new quantum AI hybrid computing frontier alongside Google Cloud, Alphabet, IBM, Microsoft Azure, quantum supremacy competition, and NVIDIA GTC 2026 quantum AI hybrid computing strategy. Contrasted with China's National Defense Science and Technology Industry Bureau, Direct Research Institute officially announcing military satellite AI targeting systems in the U.S.-China AI military hegemony struggle, the U.S. quantum AI sovereignty strategy is clarified, addressing post-quantum era hegemony competition after AGI, marking the most important U.S. quantum AI policy turning point in 2026. Third, CNBC exclusive China's Shanghai Futures Exchange officially expressed intention to fully launch an AI token futures market, marking a decisive shift in the U.S.-China AI strategic hegemony competition, enabling corporate AI compute cost hedging financial instruments and establishing China as the third pole in AI markets. ZBen Advisors' Peter Alexander officially analyzed China's Shanghai Futures Exchange AI token futures market creation as strategic positioning over electricity sovereignty competition, with Chinese enterprises pursuing structural AI compute cost hedging strategy in formal opposition to U.S. dominance, accelerating global AI token financial instrument market creation. With U.S. major commodity exchanges, CME and ICE launching GPU compute futures contracts, China's independent AI token futures market creation directly opposes the U.S.-led financial instrument trend, structurally cementing the financial instrument level divide alongside the U.S.-China AI technology stack autonomous regime building trend in a decisive moment. Alongside Huawei Ascend AI chips, DeepSeek V4, and Alibaba Qn 3.6 building China's autonomous AI technology stack, the independent AI token financial instrument market creation establishes structural differentiation, accelerating diversification of financial instruments from the U.S.-dominated AI investment thesis amid the $725 billion 2026 hyperscaler capex boom, marking the most important U.S.-China AI financial instrument hegemony turning point in 2026. Fourth, Shasta Scout reports. California Anderson City Council member Darren Hale posted an AI-generated campaign video depicting himself assaulting a teacher on social media, marking a decisive moment for AI-generated political content governance becoming a major issue, with the first major case of AI deepfake misuse at U.S. local political level becoming a serious challenge. Hale's own election campaign video used AI technology to depict assault of a so-called woke teacher, sparking strong criticism from Mayor Mike Liddau and incumbent Heather Hadwick over fueling anger and division, marking a serious case of AI-generated political content, misuse, and urgent need for governance at local political level. This contrasts with Hollywood's SAG-AFTRA Actors Union, AI contract reinforcement Taylor Swift and Matthew McConaughey, celebrity AI clone trademark registration, Ben Affleck AI film production, 16-person team, and the broader entertainment AI debate, marking a new dimension of AI deepfake misuse at U.S. local political level and aligning with mainstream consumer AI backlash trends. Aligning with 78 plus AI chatbot safety bills pending in 27 U.S. states, amid deepening conflict with the White House Federal Unified Regulation Policy and 38 states with independent AI regulation laws creating complex corporate compliance environments, AI deepfakes becoming mainstream political tools in the 2026 midterm elections is virtually certain, marking the most important local political AI governance milestone in 2026. Finally, Bloomberg reports global equity markets driven by AI investment enthusiasm have hit new highs in both Asian and U.S. markets, but concerns about labor market disruption amid rapid AI demand growth are intensifying, with investor sentiment polarizing as companies adapt to AI-driven employment pattern fundamental changes. Asia-Pacific and U.S. equity markets driven by AI-related stocks hit new highs amid the $725 billion 2026 hyperscaler capex boom and AI infrastructure second-phase beneficiary stock formalization. But with AI-related layoffs cumulatively exceeding 158,000, structural labor market disruption concerns intensify and investor sentiment polarization accelerates. Aligning with Goldman Sachs' global 300 million jobs, AI automation impact prediction, and Dallas Federal Reserve Bank 22-25 age AI-related occupation employment 13% decline data, alongside the financial and tech industry AI-induced layoff rush, including Block 4000, Salesforce 4000, HSBC 20,000, Morgan Stanley 2,500, and Cloudflare 700 employees. With 55% of U.S. adults perceiving AI as more harmful, up 11 points, and 70% concerned about job losses requiring urgent policy response, AI job loss compensation policy debate intensifies, contrasting the $725 billion 2026 hyperscaler capex boom AI infrastructure, second phase beneficiary stocks, and AI employment policy is virtually certain to be the biggest 2026 midterm election issue, marking the most important global equity market AI-driven polarization milestone in 2026. That's all for this AI news flash.